Russia's central bank has slashed interest rates for the third time since early April of 2022, taking aim at a blistering rally in the ruble, that is the country's currency, that has seen that currency more than double against the dollar from its March lows. The Bank of Russia yesterday, the 26th of May 2022, cut its main interest rate to 11% from 14%. The reduction marked a further unwinding of a rise to 20% earlier this year, at a time when authorities in Russia were attempting to stabilize the ruble against it after it plummeted in the early days of Russia's invasion of Ukraine. The dash to lower borrowing costs is a sign that Russian authorities are growing increasingly uncomfortable with the ruble's rapid ascent. Investors and economists have indicated the ruble's strength not only belies a struggling domestic economy, which is expected to slump into a severe recession this year, but it puts pressure on the government finances by lowering the local currency value of dollar-denominated oil and gas revenues, they noted. In other words, the value of the gas and oil reserves, and indeed all the other dollar-denominated assets, will have lower value. That's the implication of this ruble strength. The currency strengthened to 51 rubles to the US dollar this week, a level last seen in 2015, having briefly slumped past 150 rubles in early March of this year, 2022. It fell back to around 60 rubles following the rate cut. Such an extraordinary appreciation starts to be a financial stability issue, not mentioning risks for economic activity, according to Sophia Donetz, an economist at Renaissance Capital. In addition to hurting the government's budget balance, a strong ruble would make life difficult for some Russian exporters, according to Donetz, for obvious reasons. Those exports will become more expensive, and she added that the unscheduled rate cut was clearly pushed by the ruble strengthening. The rebound since March, which has made the ruble the best performing currency in the world this year, has been driven by stringent capital controls, curbing Russia's ability to buy foreign currency. It has also been spurred by a collapse in Russian imports, prompted by unprecedented economic sanctions combined with a continuing flow of energy exports. Russia's current account surplus soared to a record $58 billion in the first quarter of this year, 2022, and could climb as high as $250 billion for the full year unless new sanctions halt oil and gas exports, according to Elena Rybakova, a deputy chief economist at the Institute of International Finance. While this is not a free market determined exchange rate, ruble stability is at the same time real, in the sense that it's driven by Russia's all-time high current account inflows, she indicated. The stronger ruble has helped to keep a lead on Russian inflation, which has begun to ease in recent weeks, slowing for the first time since last summer in the week to May 20th, 2022, according to the state statistics from Russia. Annual inflation slowed to 17.5% as of May 20, 2022 from 17.8% in April, that agency said, or rather the statistics from the state agency indicated. The Central Bank of Russia said yesterday, the 26th of May 2022, that there has been a noticeable decrease in inflationary expectations of the population and businesses, saying the stronger currency was helping to ease price pressures in the economy. He forecasts inflation will slow to it forecasts inflation will slow to 5 to 7% next year and 4% in 2024. It had previously estimated this year's inflation at 18 to 23%. However, a stronger currency is not a sign of the economy's resilience to Western sanctions, according to Polina, Kurdyavko, head of emerging markets at BlueBay Asset Management. Instead, she argued that the ruble rally is actually a sign of the effectiveness of sanctions in isolating Russia from the global economy. Alongside an exodus of foreign companies from Russia, groups including Russia's biggest car maker, Avtovaz, have been forced to halt production due to a lack of imported components. Kurdyavko indicated that what does ruble strength really mean? She asked, what does ruble strength really mean? Certainly not that the economy is healthy. Growth will be in deep negative territory. Inflation is in double digits. Clearly, pain is being felt. On the most basic level, businesses are closing down because they can't import anything. In this environment, the Bank of Russia will have to tread carefully in seeking to tame the currency's rise, according to Rybakova. Russia's central bank is trying to loosen capital controls because it feels the ruble is too strong, according to Rybakova. But the central bank is in a rough spot. If they continue loosening, they may open the floodgates of capital flows out of the country. In previous crisis, $200 billion left the country in a matter of months. She went on to add, the bottom line is, while the ruble is stable and Russia has a current account surplus in the short term, the economic fallout from the invasion of Ukraine will undermine the Russian economy in the long term. So, thank you very much for watching this video.